What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 23rd. All right, guys, Tesla here today down 5 points a share. That's minus 3.4% in regular trading hours. It's faded about 50 cents or so, 60 cents here in the after hours. Listen, as always, after hours volume, especially on a day like today where there's, of course, no earnings or anything, volume's very low. So take that with a grain of salt, whether it's in your favor or going against you. But we do have earnings tomorrow. So it's a big night here for Tesla, looking ahead to earnings after the bell tomorrow. Currently, the expectations are that this might vary slightly depending on your source. But what I'm finding most commonly, the EPS expectation is 0.5, 50 cents. And the revenue expectation is 22.26 billion. So the day before earnings is always a big one, and there's usually quite a bit of bias to be had. Let's see if we got any today. We're going to dig through and look beyond the price action and pull out as much possible bias as the market is willing to give us here today. We'll finish out with the directional options bias and the expected move. Let's start by taking a quick look at the volume profile analysis here on the 5-minute chart. Listen, guys, by the way, Tesla is a daily upload, at least typically. So if you have not done so already, please subscribe to the channel. Helps out tremendously. Now, let's take a look. The moves that I'm primarily interested in, I want to take a look at this kind of like dump, pop, and fade that we got off the open. And then I also want to take, I'm not going to circle it, but just this kind of like slower recovery move into that consolidation period into the close. Let's take a look at the volume, see if we can get any supporting or bias that directly goes against that. And, honestly, guys, if we compare this, we did get quite a bit more volume on that opening candle compared to what we got last Friday. But what's really normal on these stocks and what's really very contextual is that you get a high volume opening bar, oftentimes the highest volume of the day, and then you see that really quick fade off. And it fades, and by usually mid to late morning, you're kind of at low of the day volume, or at least close to it. You usually end up with low of the day right after or during like the lunch period, or sometimes shortly after the lunch period, at least in New York Eastern time. But when we're doing a volume profile analysis, we're trying to look at the price action, but then the underlying volume as kind of a separate dish, right? Like we're peeling back a layer of the onion to see, is there any actual bias that we can pull out that isn't obvious with the price action that either supports a particular move, so bulls would want to see really bullish bias on the green moves and not a lot of bearish bias on the red moves, and bears would be vice versa. But we have to look at context, because we expect more volume at 8:40 Central Time than we do at, 1:30 Central Time. And the truth is on Tesla here, if we look at the actual price action, this move by the end of it was somewhat of a net negative move because we ended up just slightly lower than the open, okay? At least the move we have circled. So bears, you would obviously be looking for bias that supports that net negative move with bearish bias. Whereas you bulls, really you're looking for at least no bias. Bullish bias would be great, but no bias is directly going against what the bears would want to see. So that would also be kind of a win if you're a bull to see no bias on a net bearish move, at least according to the price action. I know it sounds very complicated. It's relatively simple if we just look here. The truth is, this is an incredibly contextual open. We just get a fade, and there's really no clear bias. I mean, yes, we had 4 green consecutive bars. However, the volume fades so quickly, as is typical, and there was really no bias. Which, I mean, if you look at it on a slightly net negative move, no bias kind of goes against what the bears would ideally want to see. And I suppose is somewhat of a win for the bulls. It's nothing compared to a strong bullish bias, but it's worth considering on a bearish move, at least a net bearish move. And then as we move into this kind of slow grind into that consolidation period, again, there's really nothing here. Okay, so let's move on. If we take a look at the self-fulfilling prophecy psychological levels starting on the 30-minute chart, again, my chart is very simple. I have the 50 period and the 200 period. Because that's what other people use as well, that self-fulfilling prophecy mentality. And look, we have the 200 period and the 50 period on the 30-minute in a hard descending position. And we've seen in the last few days that 50 acting as hard resistance. Bears, really simple. If you guys could just get a continuation of that, you're thrilled. That's really all you need to worry about on the 30-minute chart. If you can just, any test that you see of the 50 period, that white line, you just want to see the market say, hey, we're not ready to reclaim that, reject on as much volume as possible. Okay. For example, Friday, it wasn't a ton of volume, but you made a test of that and you rejected on, you held decent volume, right? Usually it might be a little bit lower at that time of day, but it wasn't crazy, but it was a good rejection nonetheless if you're a bear. That was, of course, Friday. But any repeat of that, bears, you're thrilled. Okay, bulls. A little more complicated, but here's what I'm looking for if I'm a bull. High volume break, right? Breaking that 50 on big volume, really, as much volume as possible. Above average at the minimum. A low volume retest of the level, I always like to see confirmation rather than just a break and run. That's great if you own like short-dated call options. You have to understand what your positioning says about what you really want to see. But for a more sustained move, for longer dated options, call options, right, and shares, really you want to see a high volume break, a low volume retest, and then boom, high volume confirmation bounce off the 50 period, claiming it as short-term support. And then ideally, getting this thing flattening out and returning to an ascending position. Now let's take a look at the 4-hour chart, see if there's really anything here. And honestly, guys, heading into earnings here tomorrow, the nearest thing that's specific to the 4-hour is that 50 period, and that's right above 161 right now. So I'm not really paying super close attention to the 4-hour, but if something crazy were to happen and that comes back into play, I'm going to be watching that. Okay, but I don't want to waste too much time here because you guys get the idea with what I'm looking for there. Okay, very similar to the 30-minute in terms of thought process around the moving average if it did come back into play. But again, it's right above 161 right now on the 4-hour. So here on the daily, guys, this is really going to be, to me, the most obvious thing to look at here. Earnings tomorrow after the bell. Low today of 138.80. And recently on the daily, Tesla has given up a number of psychological and technical levels. Levels that start off as technical tend to become psychological if they become obvious enough. And levels that start off as psychological, such as round numbers, maybe like a 160, right, tend to become technical levels once they get respected enough times. And again, they become obvious to everybody. Well, Tesla's given up quite a few of those in the last couple of weeks. So currently we find ourselves in a pretty wide channel between 135 and I'll say 154.50, okay, up to 155. But really, I think more realistically, that channel now sits between about 135 and 150, okay, because 150 is a psychological level. I just haven't drawn it. Now, we'll talk about this when we get to expected move here very shortly, but realistically, the border regions that I'm looking at are 135 and 150. So if I'm a bear, I would love to see a crack below 135 as soon as possible. We're looking at approximately a 5.25% move, okay? And a break above 150 for bulls, that would be wonderful. That's about a 5.6% move, at least as of the closing price today. Just making a definitive decision here around that channel, and obviously you want to see that decision be made in your favor. Now, quickly before we do expected move, implied volatility is high. This is very normal heading into an earnings event. Just be aware, guys. High implied volatility heading into an earnings event is expected, but what's also expected 80 to 90% of the time is that you see big IV dumps after earnings, because think about it, right? What's implied volatility? It's the market pricing in literally the expected volatility within a certain time frame. So as expected volatility, or implied volatility more so, rises, right? It's because you have a big catalyst in the very near future and it goes up into that closer and closer to that catalyst. Well, once the catalyst is over and the move has occurred, the options traders really usually have no reason to price in so much implied volatility anymore. So this oftentimes dumps. That directly influences, or changes, I suppose, the value of your contracts through one of the Greeks called Vega. So listen, it's a very real thing, and I'm sure many of you are aware of this. Quick refresher for those of you who forgot or aren't aware. If you purchased contracts, like you bought calls or you bought puts, it is entirely possible to be directionally correct, but if it doesn't move enough in your favor and IV dumps off a cliff, the suction out of the contract of value that comes from IV crush can be more than what gets pumped into your contracts by a delta move, also known as being directionally right. So when you buy calls or you buy puts heading into a volatility event, such as earnings, really what you're saying, I expect to be right directionally. Not only that, though, I expect to be directionally right more, really, than what the market expects the move to be. Or to put it, I suppose, more obvious and more simply, I expect to be directionally correct more than IV dumps off, if it does, which is the majority of the time. So that can change things. That can change how things are looked at. Okay, that's why when heading into earnings events, you see a lot of people selling options, trying to capitalize on perhaps a not quite as volatile move as people may expect, as well as a drop in IV, right, which sucks some value out, which is good for the options seller, sell to open. Okay, now let's take a look at expected move. Listen, guys, expected move as we head into earnings, this is really interesting. It changes things a little bit. So if we look at this, the expected move is a technical term, right? It's priced in. It's the volatility expectation, literally the one standard deviation expected move being priced in by the trader. So the next expiration we don't have the luxury of daily expirations on Tesla, of course. That's a huge luxury with something like SPY. But the next expiration on Tesla is the close on Friday, April 26th. So that's 4 trading days away, Tuesday, Wednesday, Thursday, Friday. And that's the expected move from today's closing price of $142.05 by Friday's closing price is plus or minus $14.97 per share. Okay. Now, normally what we would do is we would divide that by 4 trading days, okay, which gives us plus or minus $3.74 tomorrow. And then we would add back 50% to make up for the fact that that first number assumes a green streak or a red streak heading into the end of the week. Okay, so we add back in a little bit of volatility. In this market, I'm doing 50%. That gives us $5.61 plus or minus expected move by tomorrow, but that's not right here. Okay, we have to get a little crafty. And this is where I think experience and really thinking about what's going on is extremely beneficial. Because if we look at the next expiration, which is the Friday after this coming Friday, May 3rd, the expected move by then is only plus or minus $18 a share. Okay, but we're nearly $15 a share. And we're looking at 2 weeks compared to basically 1 week. So there's obviously a lot more expected move being priced in to this week. So we know that a lot of this expected move of plus or minus $14.97 a share is being baked in, of course, due to tomorrow's earnings catalyst. So, with a little bit of guesswork, we can assume that, if we look at this, we see, okay, they add about $3 for an entire week after this Friday. They're really only pricing in, and by the way, this does take a little bit of guesswork, but it's, believe me, more than worth doing. Was that like 60 cents a day? Likely to change as we come in closer to next week, but like 60 cents a day next week. Okay. But right now we're looking at something like $3.75 a day for the remainder of this week. Okay. But we have the earnings event. So if we assume something like 60 cents a day, okay, that the market might be looking at for the remainder of this week, and we subtract that. But then we also make the assumption that the market is likely also pricing in some continued volatility, some continuation volatility from the earnings event into the days heading into the end of this week. I'm kind of left with a very rough estimate of expected move being priced in by the market of plus or minus something like $10 a share off of earnings. Okay, now there's no directional bias there. Okay, the market isn't just going to give us the answer. If they would, we would all be rich and the market wouldn't function. That literally fundamentally would not work. Okay, so this is a volatility expectation. But if you look at that percentage-wise, that's actually a relatively sizable move. But again, a very rough estimate because we're making a little bit we're kind of doing some guesswork into maybe what the market expects on, Tuesday, Friday, let alone Wednesday, the day after earnings. Okay. And by the way, that plus or minus $10, just to be clear, that rough estimate is not by tomorrow's close. It's by more so the after hours settling movement, or perhaps like Wednesday's close, okay? Really after the earnings gets digested. But even though this really takes a little bit of thinking and digging and estimation, I mean, most traders, guys, aren't going to do all this. Okay, they're really, really, they're not. So I think it's very helpful, even if the market ends up being incorrect, right? Because expected move can't predict news. They can just do their best with a big sample size of traders to say, here's what we think is going to occur in terms of volatility. It's really good to understand what the market expects, because if you disagree with what the market expects and you're right, you can make a ton of money. Now, one more thing that we can do here. Directional bias coming out of the options traders. 1.79 million total contracts were traded here today. This is only from today, right? Crazy. 805,000 calls, 989,000 puts. So, we are seeing a bit of a put side bias here as we head into tomorrow's session, which is the one, of course, right before the earnings report. But if we break this down by time frame, the short-term speculators, the people who are buying calls and puts perhaps a day early heading into earnings, or maybe they plan to close them out tomorrow or hold through earnings, either way, that 0 to 20 delta range, the short-term speculators, we're still seeing a very slight put side bias, but it gets narrower compared to the overall. 356,000 calls and about 366,000 puts. So those short-term speculators, very much so, much closer to undecided compared to the overall. But even the overall, guys, we've seen some really heavy bias in Tesla. This is not that compared to what we've seen. It's there. There's a bearish bias on the overall, but it's not incredibly overwhelming. But then those short-term speculators, quite a bit more undecided with a big sample size of over 700,000. So listen, guys, hey, if you want to get alerts, real-time alerts for my in-play stocks every single day, those are the stocks that make up the vast majority of my intraday trading volume. Because I found through my statistics, they offer me the most edge. Take a look at that link in the pinned comment. That link, that'll let you get grandfathered in at the current rate. Those in-play alerts are offered at all 4 membership tier levels. But of course, you'll see that gold through platinum, there's quite a variety of additional benefits that all those memberships have been built around. For example, Platinum One-on-One, that's my one-on-one group that I work very closely with every single day. And that's really primarily through private message with voice messages. So listen, I appreciate you guys. If you're getting value out of these Tesla videos, subscribe to the channel, maybe even leave a like. Helps out tremendously, and I'll see you in the next one.